All right, let's settle this once and for all. Should you invest in individual stocks or go with ETFs? If you've ever felt stuck trying to decide between these two, you're not alone. Stocks can make you rich, but ETFs are easier to manage, so which one is better for you? Stick around because in this video we're breaking down the pros, cons, and everything in between. By the end, you'll know exactly which option fits your investing style. What are stocks and ETFs? Let's start with the basics. A stock represents ownership in a single company. When you buy a stock like Tesla or Apple, you own a piece of that business. An ETF, or exchange-traded fund, is like a basket of investments. It holds multiple stocks, bonds, or other assets. For example, an ETF like the S&P 500 tracks the performance of 500 of the largest companies in the US. So, a stock is one piece of the puzzle, while an ETF is a collection of pieces. Why people choose stocks? Let's talk about individual stocks. Here are the pros. Higher growth potential. If you pick the right stock, the rewards can be massive. Imagine buying Amazon in the early 2000s. Huge returns, direct ownership. When you invest in a stock, you're owning a slice of that company's success. You get to handpick which companies you believe in and want to invest in, but here are the cons: high risk. If the company underperforms, your entire investment could take a hit. Think of companies like Blockbuster or Enron. Lack of diversification. Owning just one or two stocks means all your eggs are in a very small basket. Time-consuming researching stocks takes time and effort. You need to keep up with news, earnings reports, and industry trends. Why people choose ETFs? Now let's look at ETFs. Here are the pros: instant diversification. ETFs spread your money across many companies or assets, reducing risk. If one stock in the ETF performs poorly, others may balance it out. Low effort. Most ETFs, especially index funds, don't require you to actively monitor them. They're great for beginners or those who prefer a set it and forget it approach. Lower risk. ETFs are generally more stable because they're not tied to the performance of a single company. And the cons: lower growth potential. While ETFs are safer, they don't offer the same explosive returns that a winning stock can. Fees. Some ETFs charge management fees, which can eat into your profits over time. However, many have very low fees, less control. You're investing in a pre-selected group of stocks, so you can't customize your portfolio as much. Who should invest in stocks? Well, stocks might be the right choice for you if you're willing to take on higher risk for potentially higher rewards. If you enjoy researching and staying up to date on individual companies, and if you want more control over your investments, then stocks could be a good fit. But remember, investing in stocks isn't a guaranteed win. It requires patience and a solid understanding of the companies you're investing in. Who should invest in ETFs? ETFs are ideal for you if you're just getting started and want a simple way to invest, you prefer lower risk and steady long-term growth, or you don't have time or interest in researching individual stocks. ETFs are also perfect for retirement accounts like IRAs or 401(k)s, where you want your money to grow steadily over decades. Can you do both? Here's the good news. You don't have to choose one or the other. Many investors use a combination of stocks and ETFs. For example, use ETFs for a stable, diversified foundation and add a few individual stocks to chase higher returns in areas you're passionate about, like tech or renewable energy. This hybrid approach lets you enjoy the best of both worlds. Key takeaways. To recap, stocks offer higher growth but come with higher risk and require more effort. ETFs provide diversification, lower risk, and ease of use but may have lower returns. The right choice depends on your goals, risk tolerance, and how much time you want to dedicate to investing. So, are you team stocks or team ETFs? Let me know in the comments. If you found this video helpful, don't forget to hit that like button and subscribe for more investing tips. And hey, if you're looking to learn more about building your first portfolio, check out other videos on the channel. Thanks for watching, and I'll see you next time.